You're running your e-commerce business. Things are humming along, and then, bam, sales slow down. Or maybe your stock, the very lifeblood of your operation, gets delayed. You're funded by 8-Fig, and suddenly that regular payment schedule looks less like a helpful structure and more like a looming deadline. A knot forms in your stomach. Can you delay payments on 8-Fig if sales are slow or stock is late? It's a question that keeps many e-commerce entrepreneurs up at night, especially those who rely on external funding to keep their inventory flowing and their marketing firing. The world of online retail is dynamic, unpredictable, and often throws curveballs when you least expect them. One moment you're riding the wave of a viral product. The next you're navigating a supply chain nightmare or a sudden dip in consumer spending. Let's unpack this. We're talking about 8-Fig, a platform specifically designed to provide flexible, growth-centric funding for e-commerce businesses. Their whole premise revolves around understanding the unique ebb and flow of online retail. So, if their model is built on flexibility, does that flexibility extend to situations where your cash flow is under pressure due to unforeseen circumstances? This isn't just about whether they can do it, but whether it's part of their operational philosophy. We're going to dive deep into 8-Fig's approach to funding, their understanding of the e-commerce landscape, and specifically address those anxieties around payment schedules when your business hits a snag. Think about the traditional funding models. Bank loans, lines of credit. Often, these come with rigid repayment terms. Miss a payment, and you're immediately in default, facing penalties, damaged credit, and a whole lot of stress. That rigidity, while offering a sense of security to the lender, often stifles the very growth it's meant to facilitate for a dynamic business like e-commerce. Your inventory cycle isn't a fixed monthly expense. It fluctuates wildly based on seasonality, marketing campaigns, and global supply chain events. So why should your funding repayment schedule be fixed? So let's get to the heart of the matter. You're an 8-Fig customer. Your sales have taken an unexpected dive. Perhaps a new competitor emerged, or your ad campaigns aren't converting as well as they used to. Or, even worse, that container ship carrying your most popular product is stuck in a port somewhere, threatening to completely disrupt your Q4 sales. You got a payment coming up, and suddenly, the funds aren't there, or allocating them to that payment would jeopardize your ability to recover and rebound. What do? The short answer, and one that should bring a sigh of relief to many, is yes, 8-Fig is built with this kind of flexibility in mind. Their model is fundamentally different from traditional lenders. They don't just lend you money and expect it back on a fixed schedule regardless of your business's performance. Instead, they operate on what they call a growth plan or funding plan that is directly tied to your expected revenue and inventory cycle. This isn't just a marketing slogan. It's embedded in their technology and their operational philosophy. When you onboard with 8-Fig, you provide them with your sales data, your inventory forecasts, and your overall business plan. They use this information to create a dynamic funding schedule that aligns with your projected cash flow. This means that they are already building an understanding of the inherent fluctuations in e-commerce. They know that not every month will be a record breaker, and they know that supply chain disruptions are a persistent reality. So, when sales slow down or stock is delayed, what happens? You don't just cross your fingers and hope. You communicate. 8-Fig emphasizes a proactive, transparent relationship with their clients. If you see a potential issue on the horizon, whether it's a dip in sales trends or a notification from your supplier about a shipping delay, the first step is to reach out to your account manager or the 8-Fig support team. This is where the power of their dynamic funding model truly comes into play. Unlike a bank that sees a missed payment as a breach of contract, 8-Fig views it as an opportunity to reassess and realign your funding plan. They are partners in your growth, and they understand that sometimes growth involves navigating unforeseen obstacles. When you communicate with them about slow sales, for example, they won't simply say, "Tough luck, pay up." Instead, they will work with you to understand the extent of the slowdown, its potential duration, and how it impacts your cash flow projections. Based on this updated information, they can then adjust your repayment schedule. This might involve extending the payment period, reducing the immediate payment amount, or even pausing payments for a short period to allow you to recover. The goal isn't to penalize you. It's to ensure your business remains healthy and can continue its growth trajectory. It's important to understand that this flexibility isn't a blank check. It's not an excuse to mismanage your business or intentionally delay payments without cause. 8Fig's model is built on data and projections. When you request an adjustment, they will likely ask for updated sales forecasts, evidence of the stock delay, e.g., shipping updates from your supplier, and a clear understanding of your revised cash flow situation. This isn't about being punitive. It's about making informed decisions to ensure the continued health of your partnership. This proactive communication is key. Don't wait until the last minute, or worse, after you've missed a payment. As soon as you see a potential issue arising, reach out to 8Fig. The earlier you inform them, the more options they have to work with you, and the smoother the process will be. Consider the alternative. If you were a traditional lender, a sudden dip in sales or a stock delay could trigger a cascade of negative events. Late fees, penalties, damage to your credit score, and potentially even legal action. This can be devastating for a small or medium-sized e-commerce business that relies heavily on consistent cash flow and access to capital. 8Fig, by contrast, offers a safety net that allows you to focus on resolving the underlying business issue rather than scrambling to meet rigid payment deadlines. Ultimately, the answer to "can I delay payments on 8Fig if sales are slow or stock is late" is a resounding yes, with a crucial caveat that is facilitated by open communication and a collaborative approach. They are not just lenders, they are designed to be growth partners. Their business model thrives when your business thrives, which means they have a vested interest in helping you overcome temporary setbacks. This understanding of the e-commerce lifecycle, from inventory acquisition to sales and reordering, is what sets 8Fig apart. They recognize that capital is a tool for growth, and sometimes that tool needs to be wielded with flexibility and foresight. So, if you're an 8Fig customer facing these challenges, take a deep breath, reach out to them, explain your situation, and know that you're working with a partner who fundamentally understands the unpredictable yet exhilarating world of e-commerce. With that said, thanks for watching, and until next time.